Markets this morning are rebounding from yesterday's decline. Meanwhile, we are waiting on the Federal Reserve from an investment standpoint. Federal Reserve Chairman Jay Powell's speech, much more important to investors than the situation in Afghanistan. He is set to speak virtually this morning at 10 a.m. Eastern. Fox, of course, will be covering it, and we are all waiting to see what kind of language he will say, or use, rather, as far as the central bank beginning to pull back on the stimulus. We are also waiting some economic data this morning, personal income for the month of July, spending data out in about 30 minutes' time. Joining me right now to preview all of that, Wells Fargo Investment Institute President Darrell Cronk. Also joining the conversation all morning long this morning, Dagan McDowell and Monica Crowley. Great to see you, Darrell. Thanks very much for joining the conversation. I want to bring to your attention a comment that I am reading from Cornerstone Macro. Cornerstone Macro this morning is giving their best guess in terms of the stimulus package and whether or not we see this spending and tax plan go through in the face of this debacle in Afghanistan. So my question to you is, do you think the economic agenda gets blown up because of these massive mistakes? Cornerstone Macro continues to believe that the spending plan goes through, and their predictions on tax increases has the capital gains tax going from 20% to 28%, not the 43.4% that we've been talking about. Your thoughts on where taxes are going and whether or not that is going to be a hindrance for this market?
Yeah, good morning, Maria. Good morning, Dagan and Monica. So I think they're right. The plan is still going to go through, albeit it's getting much harder as the Biden administration is losing some credibility. We have narrow margins, obviously, in the House and Senate to pass through the reconciliation. But I think you still have to assume a 3.5% or $3.5 trillion stimulus package offset by around $1.5 trillion tax increases, unfortunately, which means corporate tax rates go from an effective 21, we think, up to 25, 26. Capital gains goes from 20 up to 28, and then you reset the upper end of the personal income tax to pre-2017 levels. So stimulus still goes through, and unfortunately, taxes probably are attached with it or will have to be as offsets to the reconciliation.
They're also talking about the capital gains rate going to 32% because there's also a 3.8% tax on investment income on those earning over $250,000. This is likely going to hit anybody making as low as $400,000 to $1 million on capital gains. Do you think we're going to see a sell-off in the market this year as people speculate when this will take effect? Whether or not it's going to be retroactive is another question.
That's right. I was just going to say that's the big question, I think, is certainly I don't think anybody believed in the capital markets that we were going to 39.6 and then with a 3.8 up to 43 effectively. There was always going to be a negotiated middle. I think the consensus is around 28 plus the 3.8. I don't think you'll see a big sell-off in the markets as a result. There's too much liquidity. Equities are an important place to be. The earnings growth story, the economic growth story still remains robust, as you know. So I don't think people will run for the exits simply because the capital gains tax is going up. Actually, if you look at the history, a lot of times it shows that when capital gains taxes go up, people defer taking those gains and hang on to assets actually longer than sell them immediately.
Yeah, that's a good point, because if you're a long-term investor, you're a long-term investor, right? You're thinking, okay, well, taxes will change again in 4 years, so I might as well hold on. Darrell, how are you allocating capital right now, and what do you want to say about Chinese stocks? Chinese regulators now saying big tech companies handling large amounts of customer data will not be allowed to list in foreign countries, including the United States. The crackdown in China continues. The Chinese Communist Party says it's going to require companies to gain approval for overseas IPOs. We already know that Gary Gensler has been real tough on this, saying you're going to have to start following the same accounting rules that everybody else follows or get yanked off the exchanges.
Yeah, well, to the first part of your question, we still like being in a more risk-on situation in the back half of the year. We still think the dynamics favor early cycle. We want you to be more cyclically allocated in that regard. Relative to the China side, actually, there's a little bit of thawing, right? We saw some rebound in Chinese equities this past week on the belief that President Xi is not moving completely away from doing away with capitalism and taking the entire Chinese economy to SOE-type structures. So I think what you're seeing is kind of this coming to the middle where it's more about audit requirements and disclosure and less around delisting. Remember, we were going to delist 248 Chinese companies if they didn't provide audit results after 3 years. And that, according to the new bill that's on the table, that would shorten that window down to 2 years. So unfortunately, the China central government is very good. They're arguably brilliant at figuring out where they want to be in the middle on this negotiation. So I think it's something to watch, but it seems to be thawing more to the middle than going to the polar opposites like it had been for several weeks.
Real quick, in terms of Powell today, Darrell, do you think that he's going to talk about pulling it in, or might he be more measured given the Delta variant news recently?
He's got a tough needle to thread. He's got a growing number of hawks on the committee that want him to start exiting. I think he's going to try and still stay a dove. You've got the Delta variant, got supply disruptions. He wants to see one more labor market report if he at least defers until September. I think the real story here, Maria, is the story inside of the story, which is the Fed comes out at 10 a.m., but there's huge U.S. 10-year Treasury options expirations. 2 million contracts, over 60% of the open interest expires today, which is probably going to create a lot of volatility in interest rates as the day goes on.
Oh, that's a great point. Yeah, okay. Thanks for mentioning that expiration. Darrell, it's good to see you. Thanks very much.
You
Come
too.
back soon. Darrell Cronk joining us there.